What if I told you that the credit card sitting in your wallet right now comes with secrets? Secrets. The bank, buried in fine print, hid behind confusing terms, and prayed you'd never discover? Because the moment you find out what's actually possible with your credit card, you stop being their most profitable customer, and they know it. Stay with me, because in the next few minutes, I'm handing you the playbook they never wanted you to see. Welcome back to American Credit Guide, the channel dedicated to giving everyday Americans the financial knowledge that used to be reserved for people with expensive advisors and insider connections. If this is your first time here, hit that subscribe button right now, because every single week we expose the strategies, loopholes, and credit secrets that the banks and financial institutions would rather keep quiet. Today's video is one of the most important ones we've ever made on this channel, so make sure you watch till the very end, because the last secret we reveal is the one most people never even think to look for. Let me tell you something. The credit card industry spends millions of dollars hoping you never figure out. They don't make money from the people who game the system. They make money from the people who don't know the system exists. And right now, you're about to cross over to the other side. The first secret, and this one alone, could save you hundreds of dollars this year, is something called the grace period exploit. Every credit card in America comes with a grace period, usually somewhere between 21 and 25 days after your statement closes. During that window, if you pay your full balance, you owe zero interest. Zero. Not a penny. Here's what most people don't know. That grace period essentially gives you free short-term financing every single month. If you time your purchases right is less than #0, 1 hash is greater than buying something the day after your statement closes. Means you could have nearly 55 days before that charge costs you a single cent in interest. 55 days of free money. The banks know this. They just don't advertise it. But here's the catch. The moment you carry a balance, even once you lose the grace period entirely, now interest starts accruing from the day you swipe. Not from the due date, from the actual purchase date. Most people have no idea this is happening to them right now. So the first rule of beating the banks at their own game? Never break the grace period. Not once. Now, let's talk about something even bigger. There's a feature sitting inside most credit card accounts right now that almost nobody uses. It's called a retention offer, and banks use it quietly, behind the scenes, to keep customers from canceling their cards. Here's how it works. If you call your credit card company and tell them you're thinking about canceling, especially if you've been a customer for over a year, they will often offer you something to stay. Statement credits, bonus points, a temporary waiver on your annual fee. We're talking real money. Cardholders who know this trick routinely get $50, $100, sometimes $200 just for making a 5-minute phone call. The bank would rather pay you to stay than lose your account entirely. That's how valuable your loyalty is to them. But they will never ever proactively tell you this offer exists. You have to ask, specifically. You say, I'm considering canceling my card. Is there anything you can offer me to keep my account open? That's it. 4 seconds. And then you wait. What comes next might genuinely surprise you. Here's where it gets deeper. Most Americans think credit card rewards are straightforward. You spend money. You earn points. You redeem them. Simple. But the redemption side is where the banks quietly take back a huge chunk of what they promised you. Cashback redeemed as a statement credit is almost always worth less than cash deposited directly into your bank account. Points redeemed through a bank's own travel portal are often worth 30 to 40% less than the same points transferred to an airline partner. The banks design their redemption systems to be confusing on purpose. They want you to grab the quick, easy option, which is almost always the option that benefits them most. Here's what smart cardholders do instead. Before redeeming anything, They compare the value per point across every available option. The sweet spot is almost always transfer partners. Airline miles and hotel points transferred from a credit card program can routinely deliver 2, 3, sometimes even 4 cents per point in value. Compare that to the 1 cent per point most people get when they cash out for a gift card. That's not a small difference. On 50,000 points, that gap is worth $1,500. Same points. Completely different outcome. Just because of where you redeem. Now let me tell you about the trick that almost nobody talks about, and honestly, the banks really don't want this one getting out. It's called the authorized user strategy, and it works in 2 directions. If you have someone in your life, a parent, a spouse, a close family member with excellent credit history, and an old credit card account, ask them to add you as an authorized user. You don't even need to use the card. You don't need to have the physical card in your possession. Simply being listed on that account can add years of positive history to your credit report, a lower average utilization rate, a longer credit age. Your score can move significantly, sometimes within 30 to 60 days. Now here's the other direction. If you have good credit and someone you trust needs a boost, adding them as an authorized user on your account costs you almost nothing as long as they don't actually use the card. It's one of the most underused credit-building strategies in America right now. Banks profit from people with lower credit scores, higher interest rates, less favorable terms. Every point you add to your score costs them money. Think about that. Let's keep going because this next one is something even financially savvy people get wrong. Your credit card statement closing date and your payment due date are not the same thing. And confusing the two is silently damaging credit scores across America every single month. Here's what happens. Your balance gets reported to the credit bureaus on your statement closing date, not your due date. So, even if you pay your bill in full and on time every month, if your balance is high on the day your statement closes, the bureaus see a high utilization rate. Your score takes a hit, and you did everything right. You just didn't know about the timing. The fix is simple once you know it. Pay down your balance before your statement closing date, not before your due date. Before the closing date, that's the number that gets reported. That's the number that matters for your score. Set a reminder. 1 week before your statement closes, log in and pay down your balance as low as possible. Under 10% of your limit if you can manage it. The bureaus see a low utilization. Your score reflects responsible usage, and you maintain the grace period by clearing the remaining balance on the due date. 2 payments a month instead of 1. That's the whole secret. Banks don't teach this because a higher credit score means you qualify for better cards with lower rates, and that's less profit for them. Now, let's talk about something that sounds almost too simple, but the data backs it up completely. The length of your credit history accounts for 15% of your FICO score. One of the fastest ways people accidentally destroy their own score is by closing old credit card accounts. They think they're cleaning up their finances, getting rid of cards they don't use, being responsible. What they're actually doing is shrinking their available credit and potentially wiping out years of positive history from their credit age calculation. An old card with no annual fee that you use once every few months for a small purchase? Keep it. Forever if you can. It's doing quiet. Invisible work for your credit profile every single day it stays open. Here's what most people don't know. If a card you haven't used goes completely dormant, the bank can close it without warning. And when that happens, your credit age and available credit can both take a hit. The solution is to put one small recurring charge on old cards, a streaming subscription, a monthly bill, something under $20. Then set up auto pay for the full balance. The card stays active. The history keeps building. It costs you nothing. One more secret, and this one is about timing. If you're planning to apply for a new credit card in 2026, the best time to do it is right after your score has been reported at a low utilization rate. The strategy is simple. Pay down your balances. Let the low utilization report to the bureaus. Then apply within the next few weeks while your score is sitting at its peak. You'll hit the application with the strongest version of your credit profile possible. Better score means better approval odds and better terms. Banks pre-approve applicants based on snapshots in time. If you control when that snapshot gets taken, you control the outcome. The people who are truly winning with credit cards in 2026 understand one fundamental truth. These companies are sophisticated, data-driven businesses. Every policy, every interface, every reward structure is designed to maximize their revenue. But the rules they operate under also create a very specific path, a path where informed, intentional consumers consistently come out ahead. Free travel, cashback, credit scores in the top tier, zero interest paid, all completely legal, all hiding in plain sight. The difference between the person paying 24% interest and the person flying first class for free isn't income, it's information. And now you have it, and there you have it. The credit card secrets that banks have been quietly keeping from everyday Americans until now. This is exactly the kind of information that changes how you think about every swipe, every statement, and every dollar going forward. If this video opened your eyes even a little bit, do me one small favor. Hit that like button right now. It tells YouTube this information matters, and it helps us reach more Americans who are tired of being kept in the dark. If you're not already subscribed to American Credit Guide, now is the time. We drop new videos every week, breaking down credit card strategies, score secrets, and money moves that actually work in the real world. Got a question or a topic you want us to cover next? Drop it in the comments below. I personally read every single one. And if you know someone who's struggling with credit card debt or just trying to figure out how to make their cards work for them, share this video with them right now. You might just hand them the information that changes everything. See you in the next one.